What's up, guys? Welcome to another edition of This Week in Crypto, our live stream where we talk all about the crypto markets, what Santiment's metrics are showing in terms of on-chain and social activity, and what we expect next for the markets based on probabilities, historical references, and general understandings of how markets tend to fluctuate in conditions, especially as unique as what we're seeing right now. As always, I want to remind everyone on a very important show here that our goal is not investment advice. Our goal is to help show what Santiment's metrics are indicating at the moment, help you kind of make your own assessments based on that, and answer questions you have based on the conditions we're currently seeing. So with that in mind, 2 days ago, less than 2 days ago, I'd say maybe about 30 to 34 hours ago, was a pretty monumental decision by the SEC to approve 11 different spot ETFs and essentially give all of the major applied ETFs the opportunity to battle it out for user engagement on these completely new ETFs to the crypto market that is going to allow exposure to traders out there and investors who may not have ever been in crypto the traditional way or want to be in crypto. And as you would expect, this has had some positive outcomes on the crypto markets, not quite the way many of you may have exactly thought. Especially with Bitcoin, we can see based on our data screener here, it's only up about 4% over the past week, and most of that happened before the ETFs were announced. It's about right where it was when the ETFs first were approved, sitting between 45 to 46. I think it actually might be just a few $100 below the market value that it was when the ETFs were approved. So that's a very interesting development. However, we did see some major gains across several altcoins initially, followed by a bit of a tick down. That's why you're kind of seeing a lot of neutral performances. There's still some huge gains, such as Ethereum Classic, which I believe has some exposure through one of the grayscale ETFs. So it's benefited greatly. Hex has been kind of just churning along independently, up 140% now over the past week. We can see SUI, another huge gainer at plus 46%, Arbitrum here at plus 23%, Mantle plus 37%, Litecoin plus 17%, and Bitcoin Cash plus 21%. These are two notables. A lot of people anticipate they're going to be having some exposure and have some positive decouplings from the crypto markets as a result. We had Cardano and Avalanche performing very well initially, but they've kind of fallen back as of late. Lots of independent stories out there, and we'll try to get to as many as possible. But overall, the initial reaction from the market's standpoint was Bitcoin stays afloat and altcoins go on a tear. And I think for a lot of people, this is actually disappointing, believe it or not. It's especially when you assess Bitcoin and you look at what's actually being approved. Well, this is spot ETFs specifically to give more exposure to traders of Bitcoin. And as a result, you would expect that Bitcoin is going to go on a run of its own. But the argument that we've been mentioning is that Bitcoin was already kind of baked in here. We were already seeing such a huge climb going back to mid-October when that bull cycle started. We were below 30K now, or below 30K then, excuse me, and now we're above 45K. That plus 50%, I think it even was like a plus 65% run or so since mid-October. That happened with the anticipation of this event happening. And now we're in this buy the rumor, sell the news situation in most people's eyes, or at least many of our eyes, where it seemed as though people were so excited about the prospect of ETFs being approved that it gave no room for prices to continue to grow once they actually were approved. This is a very common phenomenon known as buy the rumor, sell the news, where you see the anticipation of it, it comes true, and then it's almost a letdown price-wise when it actually occurs. This is due to so much of the FOMO kind of pricing in, as they say, the future reaction to the event happening. So we kind of predicted that there would be a bit of a neutral outcome, at least initially. Long term, I think this is still a great sign for crypto, but what would have been devastating is if there was a big delay or the SEC just said no and they can't see how it could work. Then we would see a big crash, and luckily that didn't happen. If you were a bear betting on that, our condolences. But in reality, this looked pretty likely that it was going to happen for months and months now, and prices were kind of baking it in as though it was an inevitability. Very hard word to say this morning. Now people are talking about whether Ethereum and XRP and some of the other popular assets in the top 20 or so might be getting ETFs of their own in the near future. We put out a poll just yesterday to see how people would feel about a future ETF for Ethereum or potentially another asset. Ethereum is just the most popular candidate as of now. We said with several Bitcoin ETFs being approved by the SEC Wednesday, there are growing hopes that Ethereum and other assets will have their own ETFs approved next. When do you believe another asset, Ether or otherwise, have their own ETF be officially accepted for public use? And I'll just do a random vote from our secondary Santiment account. I'm going to say at least 2025 or beyond. And that's the second most popular answer, but more than half, I guess I should say about 62% when you combine these top two, believe it'll happen by the end of 2024. 10% actually believe that another assets ETF will be approved by the end of the month. I don't know how realistic that is. We'd have to hear some really big bombshell news very quickly. I'm not even sure if it's possible. I've heard the month of May is when there's a current Ethereum ETF on the table to be approved. Perhaps there's something secret. It wouldn't be an absolute shock if there is something that's pending sooner than that. But I think people are correctly kind of assessing that the most realistic possibility would be by the end of 2024. I think this was such a big decision by the SEC that they're really going to take their time before opening the floodgates to altcoins. And yes, some of you believe that Ethereum shouldn't even be classified as an altcoin. It's in its own space, kind of like Bitcoin. But I think from the SEC's perspective, just kind of reading the room, some of the articles that I've looked through, it seems as though they need to be really, they want to be very careful with accepting any other ETFs right away, because there's going to be this huge clash of people, and altcoiners don't want to feel like one asset is getting special treatment. And if Ethereum is suddenly accepted, the XRP or the Cardano or the Chainlink community might come out of the woodwork and say, why is Ethereum getting this special treatment just because it has a higher market cap? And it could open a whole lot of debate and negative backlash toward the SEC. And of course, the SEC already got a lot of that backlash when their account was allegedly, I think it's pretty much proven at this point that their account was hacked. And that was a pretty big deal. I don't think we've ever seen that before. And 2FA was to blame. It seems as though they didn't quite have a proper security measure on their own account. That has since been corrected, but if you remember Tuesday, about 24 hours before the actual announcement, their account was hacked, and it was mentioned that the ETFs were already approved. And we saw a similar reaction where altcoins took off. Bitcoin had a slight climb, but then dropped back down. And that's essentially what actually happened when it was approved the next day. So there is a conspiracy theory out there that the SEC perhaps wanted to see how the crypto markets would react and see if altcoins took off the way they did. And then the next day they actually approved it and prepared their portfolios accordingly. I don't know how realistic that is, and ethics aside, what you think about the SEC and entities like them, who knows, right? But regardless, we have approved ETFs, and now we have to ask ourselves, what next, right? Is it a completely new era for crypto? Is 100K plus Bitcoin really the next step? Could it happen by the end of this year? Well, absolutely. That's not outside the possibility of reason here, with 2023 returns going up 155-ish% for Bitcoin. If we take where we're at now, let's just round down to 45,000 and multiply that by 1.55. That would bring us to a new all-time high of $69,750, so just shy of 70. That's if we repeat the same returns percentage-wise that we saw in 2023. If we perhaps get a 2.5 or 250% return this year, that would bring us well over $100,000 Bitcoin. So from a mathematical perspective, we've seen plenty of years where Bitcoin has gone up to this extent, 250%. We have a big event still to come in about 3 months, known as the halving. Bitcoin halving is essentially where mining coins becomes twice as difficult, which theoretically makes each coin that much more valuable because they become more scarce, right? And historically, going back, we won't count 2008 because that was the year that Bitcoin came out, but in 2012, 2016, and 2020, we saw some of the best performing years for crypto. And that is the 4-year cycle that we're on this year here in 2024. So from a small sample size, if we look at price performances, 2024 looks like a good year for crypto on the surface, but as we've seen many times, prices do go the direction of the crowd's least expectation. So if everyone believes it's an inevitability that 2024 is going to be this huge year, and we have all of these huge buys right and left from small traders, then sharks and whales will see that, put up big sell walls, and we could actually see the opposite result. We saw how much FOMO there was at the end of 2021. If you guys remember, just about 2 years ago from where we are now, we were just starting to see a pretty big retracement on crypto prices everywhere. Early 2022, there was kind of a bloodbath, and there was, it's better if I visualize it, but if we go back, we'll just say 2021, let's take these off for just a moment, and we're going to look at just the raw, candles is fine. So we had this huge buildup. This was the true all-time high here, just shy of 69K. And we started to drop off huge here in December. And then January, right? We really saw just about 2 years ago to the day, this really scary drop going all the way down to the mid 30Ks, even low 30Ks at 33K by January 19th. And we had this huge buy the dip kind of crowd assessment that it was time to run prices back up. And we saw that to a small extent, getting all the way back to 48K. And then there was this massive disappointment, right? So the point I'm trying to make is when you see that the crowd is still in euphoria mode, or they think that, prices can only go up, everyone's going to salivate at a retrace, and there will be a retrace sometime in 2024. I guarantee it. I don't know if it's going to be down to 30K again or anything, but even a minor one to the low 40Ks, you'll see a big contingency of traders want to buy the dip. And depending on how optimistic they are on that dip, that'll be the time where we'll really see whether whales and sharks are going to put up or shut up on pushing the prices to 50K and beyond. And we have so many factors that we need to look through in order to figure out whether that will push us all the way to new all-time highs like we saw back in November of 2021. And we'll just begin some of the analytic assessments with whales and sharks. I think it's important to really look at how they've been behaving since the ETFs were approved. So if I open up this fairly simple chart here, there's 4 different lines on it. We've got the bright green showing the percentage of the supply of sharks and whales, which we deem wallets between 10 to 10,000 BTC. We have the absolute amount of BTC held of those 10 to 10,000 BTC wallets. And then we have Tether and USD coins with wallets specifically holding between $100,000 to $10 million, which we have classified as those main active wallets that hold a certain amount of coins from traders who are able to move markets. So looking at the stable coins, you can see that sharks and whales have been dumping pretty aggressively. So this isn't necessarily the end of the world, but it implies that the buying power, the amount of dry powder, if you will, of these big addresses has been going down pretty significantly, especially since the rally really was getting into gear in early November. You can see they started to shift directions, and they're holding. We go back to the past year. Tether, the amount of Tether held by sharks and whales is at its lowest point since February 2023. USD coins looking a little better, but they're still at their lowest point since late April 2023. So naturally, I think the story here is Bitcoin sharks and whales have absolutely swapped a lot of their stable coins for Bitcoin in order to push up prices. Not really anything revolutionary there. It's happened many times before. But if we now look at the amount of BTC held, it's a little more flat. It has gone up, certainly. We see, especially since mid-June, they were holding about 12.94 million Bitcoin collectively, and now they're sitting at 13.04 million. So that's a nice 80,000 BTC gain, hundreds of millions of dollars in accumulation right there. The percentage of the supply is not looking quite as great. This is a little misleading because there have been, I think, thousands, if not tens of thousands, more Bitcoin mined over the past year. So the supply is still pretty flat. They hold about 66.6%, which is just a little lower than what they were holding a year ago. But mining-wise, you can see that a lot of these miners are in this shark and whale range, which is not a surprise. So they're holding many more coins than they were a year ago, but their percentage of the supply is still fairly flat. Long story short, I'm still concerned about how much Tether and USD coin have been going down in terms of the percentage held by these sharks and whales. Part of the change that I think we're going to see from these ETF approvals is there are going to be less stable coins held overall because more people are now able to purchase crypto through fiat, right? They can go straight from their banks or their platforms where they trade stocks, equities, etc., and they can access ETFs. Now, there's a controversy with a few platforms such as Vanguard, which is under fire by the crypto community for not allowing ETF trades within their platform. So I find that interesting. There are some backlashes to some of these financial institutions who don't really believe that the Bitcoin and future other crypto ETFs are part of their ethical mantra, if you will. I think there's maybe some will change their mind. Perhaps some have already thought this through and are never going to change their mind. But there's a limited amount of ETF purchases that are really going to come, especially for people who are under one of these very popular financial institutions, especially here in the US. Regardless, I think stablecoins might continue this trend because I think more people are now going to be using fiat to buy crypto overall. And the entire way that we analyze on-chain performance might change as well because of the fact that ETFs, which are not on-chain, are going to kind of become a slice of the pie of owned crypto and how people purchase it. And I think over the next week, we're really going to start seeing some changes. You can see here, for example, Tether, even prior to the ETF approvals, has been on an absolute surge in terms of coins moving to exchanges. This is undoubtedly for the purpose of buying crypto, and you can see how the price of Bitcoin has gone up as Tether's supply and exchanges has gone up. They're at $17.81 billion in Tether on exchanges now, compared to 7.67 billion in March. So it's gone up way more than double. Over $10 billion have been increased in terms of Tether on exchanges, which is huge. USD coin even is up to its highest level since last May, with $2.65 billion on exchanges. The supply of Bitcoin on exchanges, on the other hand, is down. You can see since last week, just over the past 5 days, it is up slightly. If we really zoom in, this was the day of the ETF, and the supply has actually gone just very mildly down. It hasn't even moved by 0.1% yet, but I still think ultimately the way supply and exchanges moves will be completely different with ETFs in the fray now. I don't know whether it will mean, Bitcoin will go up or down. If I had to guess, I think that Bitcoin's supply and exchanges will actually start to move to exchanges a little more. At least a small percentage of current crypto owners and traders are going to switch between owning crypto and owning an ETF where they get exposure into crypto instead. So for that reason, I think there are going to be less overall addresses. So if let's just reset this layout really quick, get a fresh page, and look at the number of addresses here. So if we just say, for example, tell me the amount of all non-zero coin Bitcoin addresses, hit confirm, you can see that it is starting to tick down. There has been a drop just in the last few days, very slightly, going from 52.66 million down to 52.58. Let's get rid of this red line. This is all we need here. Let's add on the price as well. So in dark green, these bars are the price, the daily price of Bitcoin, and then yellow is the amount of wallets in total that hold coins. Basically, any wallet that has over 0 coins, they're in here. If the line goes down, that means that wallets are getting liquidated and they're going from a positive number to a 0 number. So 0 numbers are not counted. That's the only reason that this line ever goes down. You can see there was a big flattening out period here, and that's actually a good thing in most cases, because usually when wallets go down, they can only go down at this significant level if it's a lot of really tiny micro addresses that are all liquidating and giving up on crypto. And you can see why they gave up. There was this long stretch of time where Bitcoin was barely moving for those who were in crypto last August through early October. So a lot of people just got impatient and said, I give up, crypto's boring now. Prices keep ranging between 25K to 27K. I don't have time for that. And then all of a sudden we see this big move above 30K, gets all the way up to about 34. And by late October, when the rally is really kicking into gear, you see that wallets are surging here. And then right at the end of the year, December 31st, they're at 52.68 million. And since that time, there have been 103,000 Bitcoin wallets that have actually been liquidated in net. So there have been some new addresses, of course, but when you take the difference between new addresses being created and current addresses that were liquidated and brought to 0 coins, the difference is 103,000 coins being moved off of the network. So that's a huge amount. The good news is, like I said back here, when there's a flattening out period in these addresses, it's generally a good sign. Certainly not a guarantee. Let's go further back. Let's go all the way back to, let's say, 2016. Look at the last 8 years. So we can see plenty of moments where lots of wallets went off of the network and prices still went down. We can also see other times where there was a big flattening out period and that was a perfect bottom, right? Arguably here in January of 2019, that was a great time to buy if you were looking at the amount of wallets that were dropping off of Bitcoin's network. So in general, anything can happen, but I like the odds of crypto going up whenever you see a bunch of tiny micro addresses liquidating and getting out of crypto because they're giving up on it. That's usually the time when sharks and whales are getting stronger and stronger themselves. So pay attention to the ratio of wallets that hold between 10 to 10,000 Bitcoin versus wallets that hold, 0.00001 to 0.0001 or so. When you're looking at those addresses that hold under $10 and they're going away, while those addresses with $1 million or more are going up, usually a good sign that the big key stakeholders are getting stronger and therefore pushing up the prices over time. All right, so that's enough on Bitcoin key stakeholders. Let's move over to some of the other main metrics. I'll mix it up here before I just look at Bitcoin and go through some of our main metrics. Let's look at the MVRV outlook. It may do a little refresh here, so I'll try to look really quickly. You can see most altcoins now are starting to trickle back into the semi-overbought or overbought zone. That would make sense since altcoins went on a pretty big run, especially just in January, even before the ETFs were approved. A lot of altcoins were seeing these big breakouts, and that had a dramatic effect on this model where you can see a lot are now back in orange and red territory. Looking at like the end of December when altcoins were starting to have some trouble continuing their pattern, it was more mixed. You saw lots of different assets with the semi-underbought or underbought designation. So there's still some like storage that look underbought, Audius, Bounce, ApeCoin, Linear, Loom, Keeper, P Network, and Reef, just to name a few that are on this model. But then there are others like Ethereum name service that are just completely off the chart. This has been one that's just been going bonkers. Mantra DAO, ARPA Chain, Bluezell, Chromia, Constitution DAO, SSV, Scale, VitDAO, just to name a few. The Graph and WooTrade also looking overbought at the moment. So with altcoins leaning into a danger zone once again, when looking at the majority, I would recommend proceeding with caution going into this weekend. I do think that there might be a round of Bitcoin dominance coming up. Especially now that traders' focuses have shifted from, expecting Bitcoin to go to 50K and beyond. They've now pivoted back over to, all right, altcoins seem like the play, so I'm going to invest in more speculative assets. That increases the probability of Bitcoin now getting its turn in the sun to go on a bit of a run now. So all in all, be a little careful if you're in altcoins, especially one of the ones highlighted in red here. Even if it's not on this model, which the majority of altcoins are not on this model, understand that roughly 80% of these, maybe even more, are going to be overbought due to so many altcoins churning along and acting similarly in price to a lot of these red and orange bars here. Okay. Another thing I want to look at before we get into Bitcoin's metrics, take a look at just the overall trending keywords right now. We see Vanguard is the top trending keyword because of what I mentioned before. Users are frustrated that the platform doesn't offer Bitcoin ETFs. Some users are considering transferring their accounts to other brokerages, so they can be part of these Bitcoin ETFs. So, obviously, a lot of this is public pressure to try to get Vanguard to change their minds. I personally don't think they will. I think an established brokerage like Vanguard fully knew what they were doing when they decided to say no to these Bitcoin ETFs, and they knew that the crypto crowd would have some backlash against them. But I have a feeling that they thought out the pros and cons and made this decision, with the understanding that the crowd is not about to change their mind. We also see Nano. I've seen it really trending the last couple of days. If we switch over to trending tokens, I'll go back to the keywords in a moment. But Nano is the #1 trending token right now, and you can see that it's been on quite a run here. And it has kind of this cult following to it, not in a negative way. It just, in terms of smaller altcoins, Nano has always been one that has a pretty large contingency of believers in their asset. So I've seen a lot of discussion about what's unique about Nano, especially its low, almost non-existent fees. So Nano is trending for the purpose of mostly just talking about its big price run, but also it's beginning to get some interest in its unique nature in terms of its blockchain. Others out there, no surprise here, ETFs, Bitcoin ETF, GBTC, which was a stock that had to do with Grayscale's Bitcoin Trust. I find this interesting because GBTC has been around for several years now, and it's now the leader in trading volume on the first day after its launch. I'm guessing that this is kind of like a revamped version of the existing GBTC. I'm not an expert on this, to be fair, this particular ticker. So if anyone in chat cares to chime in, I would love to look at it for a few minutes, just in terms of news. But I'm going to, go ahead.
I'm not sure about it, but I think it's mostly said to be outflows. So basically, they created a lot of volume because people exit GBTC and get into the other ETFs, basically.
So is the ETF making an error here by saying the first day after its launch?
Yes, I believe so.
Okay, that's fine. I mean, look,
I think there was some kind of
conversion
that they do, so I'm not sure about the details. But I just heard from a lot of different angles that they had high outflows basically of the old product.
Makes sense. Makes total sense. So GBTC is trending due to it having a huge amount of volume. It sounds like due to outflows more than anything. Spot is a trending word. And then these are two new ones here. IPO Stablecoin firm Circle has confidentially filed for an IPO after failing to go public via SPAC in 2022. That's interesting to hear. So Circle is they're associated with USD Coin, the second largest stablecoin out there. So slight bit of concern there if Circle is starting to have a little bit of legal trouble. But I think that's something we can monitor over the next week. And then finally, CPI is picking back up again. If we look at the trend for CPI, there was, let me check on this, but I believe there was another piece of the CPI report released yesterday. Final inflation. Oh, okay. So this was the, it makes sense. So they released their final inflation report yesterday. And it says that U.S. consumer prices rose 3.4% annually to close out 2023, capping off a year of substantial progress. It rose 0.3% in December from the month before, matching expectations. So it was kind of on par with what the likely outcome would be. They actually expected an overall inflation rate to tick higher to 3.2%. It went to 3.2% from the 3.1% headline reading the month before. Despite the acceleration, the annual rate of consumer level inflation is down considerably from December 2022. For those who are in the past year to 2 years, you totally remember how much the negative inflation reports were impacting crypto, and interest rates were skyrocketing as the Fed were trying to combat all the inflation going on. Well, now we're seeing a pretty positive turnaround on that. And, equities have obviously gone great. Gold and silver have done really well. And of course, crypto has gone well, for plenty of reasons, but I would not rule out that part of its big surge over the past 3 months has been due to these positive CPI reports and the lowered inflation that has been going on. All right, a few other trending tokens as well while we're on the subject. So right below Nano, you have Bitcoin, of course, and then Ethereum. Bitcoin directly related to the spot ETFs that were approved, and Ethereum being the most popular candidate to have ETFs approved next. So they're being talked about a lot, and its price got all the way up to the mid 2600s yesterday. So they're doing quite well and have some dominance over Bitcoin for the time being. SUI, as we mentioned, was a big gainer. You can see pretty much all of these on the chart, except for the very last one, are trending due to price surges. I also see USD coin. This is related to that Circle news that I just read before. And then MXC here is trending to, in the given text context, users are discussing issues related to the migration process, claiming MXC tokens and the high gas fees required. Some users are concerned about the profitability of mining and the loss of investment due to migration and XMXC/MXC ratio. So this could be a candidate for getting a little too much FUD at the moment. If you are feeling gambly, then these kinds of patterns are typically associated with a lot of FUD and negativity. If we were to look up MXC by itself really quick and just look at its social volume and negative sentiment, we'll just look at social dominance to make it easier. So huge drop back in September. If we just look at the last month, yeah, I mean, we see some spikes. They're not incredible spikes, but adding weighted sentiment here. Yeah, we saw a lot of negativity back on the 8th, right before the ETF approval, and it's starting to just go back to neutral. So if you see another negative spike, this could be a sign of a bounce coming up. You can see during these intervals where there was a ton of negativity, that's where prices were actually surging and went through a few big local tops right after. So it looks to be extremely volatile, and it's also a very low market cap asset at number 742. All right, so going to Bitcoin now, let's take a look at some of its main metrics and see where the overall network health is of the top asset and therefore all of crypto. Just a traditional refresh really quick. Go to our main template here. So starting with transaction volume, so we'll just do it in terms of dollars. Yeah, this was the biggest day of transaction volume in terms of dollars back on the 10th, the day that it was approved, the ETF was approved, since going back to, it looks like November of 2022. This was right when the FTX collapse was going on. So transaction volume has picked up huge, predictably, as a lot of people have polarized opinions on these ETFs, a lot more positive than negative, of course. And then trading volume, you can see it has just erupted. It's at its highest level since March, and it may not be done growing. I wouldn't be surprised if this next week we actually surpass the trading volume we saw in March on a daily basis and get up to the levels that we saw during the FTX collapse. But for now, it's a good sign that the long-term trend since October is rising volume into a rising price. That's usually what is needed in order to justify continued growth from the market caps. On the other hand, let's go back to just about 6 months. Utility-wise, daily active addresses are definitely very down. If you look at the trend line, over the past 30 days, it's down to 830,000 unique addresses interacting on the network per day. That's a far cry from where we saw the active addresses back in early October at 1.04 million addresses per day. So that's maybe a 15 to 20% drop in daily active address activity right now, indicating there are less unique addresses actually moving on a daily basis. Circulation-wise, it is looking better. It's actually just very slightly growing. We're up to about 99.6 thousand unique tokens moving per day. And if we look at our NVT model here, that has been enough growth to actually show that market caps are where they should be, if not even a little bit lower than where they should be, because of the fact that there has been so much unique token movement over the past 30 days, 60 days especially. So I think that this is a positive sign for upcoming price movement. You can see what happened as soon as prices moved away from this red zone here in September, really blasted off ever since. So I like the look of this quite a bit. Going down to MVRV, seeing where we stand, the 30-day returns are not really too scary at all. Makes sense because Bitcoin didn't really move much ever since the new year. It's certainly up since this flash crash that happened on January 3rd, but overall 3.1% gains for 30-day traders is nothing special whatsoever. I'm still concerned about the long-term trend though, because average trading returns for 365-day traders is up to 37% for a metric that is supposed to fluctuate around 0%. So keep an eye on that for sure. On the funding rate side, it's essentially been flat for the past week or so. Not a lot of movement on Binance, which is by far the most weighted funding rate to pay attention to. All of these longs, just prior to the flash crash here, they were the big concern. So I'm happy to see that those longs have gone away, at least for now. We'll see what happens if prices really go on a run today before the weekly stock market close, especially here in the US. Monday is President's Day, so stock markets are closed until Tuesday. So we may see a little extra volume from big traders in the stock market that could very well trickle down over to crypto, and then we might see some longs going into the weekend. I can't predict whether prices will go up or down specifically today. I wouldn't be shocked, though. I think there's a higher probability than usual due to the 3-day weekend for stock markets and tendencies for people to pump up prices going into a longer holiday. Whale transactions, not too special right now. Let's zoom out a little more. I should revise that. So there was a pretty big pump in whale transactions going into the ETF announcement, especially if we look at $1 million plus transactions. These were huge. The past 2 days before today were the largest we've seen going back to, yeah, they were the largest two over the past year. So that's certainly significant and shows that the key stakeholders were very much paying attention. We already looked at the percentage they held, though, and they've essentially been flat, even with all of these whale transactions. So between all of the whales that have been interacting on the network, their actions have kind of canceled each other out in terms of accumulation versus dumping. Looking at mean dollar invested age, I also think it's very important to understand that this curve is moving down, not at an aggressive pace, but dormant tokens have been moving since the start of the big bull cycle in mid-October. The average amount of days that investments were in crypto was at about 641 back on October 21st. It's now down to 623. Why is this significant? Well, in general, when you see these big waves of downswings in mean dollar invested age, this is usually a validator that we're in a bull market. And with the halving coming up, many argue that this line is just going to come down more and more as we get close to that big day, where it's been traditionally a very bullish event. I'm not convinced just yet that this is an official, switch to just a huge downswing in mean dollar invested age like this, but I do think we are close to that being the case. There's some serious breakout potential here, and if you start to see mean dollar invested age go on a big free fall like this, where each day it's dropping 5 to 10 days, yeah, I would be pretty convinced then that we are on our way toward challenging those all-time highs that we saw back in November of 2021. Realized profits, as you'd expect, they've just been incredibly high ever since October. Eventually, what goes up must come down, and we need to see some realized losses cancel some of these out. But they haven't stopped yet, and there's no indication that, especially with the ETF approvals, we're about to see this big turnaround and have serious retraces. But it will eventually happen. It might not happen in the next week, but there will be something probably in the next 3 months, maybe 6 months. And I wish Maxim was here, because he is of the mindset that we are probably near a top. He even correctly pointed out that 49K would be the local top after the ETFs were approved, and there was that next day very brief breakout. But it's hard to say whether we touch 50K before we begin to trace down to low 40Ks or something like that. I don't have a prediction on that front, but it will be completely dependent in my mind on social sentiment from the smaller traders. Are they going to get euphoric about ETFs as the news continues to spread over the next week? And of course, are whales and sharks going to start accumulating now, or are they just going to dump into all of that euphoria that we expect to continue to grow heading into the weekend? And I should also mention social dominance just being through the roof. You can see on January 10th, we had one of our highest social dominance days in a couple of years, going up to 36% that day. It's coming down just a little bit, but it's still extremely high compared to normal. That's not a bad thing. A lot of Bitcoin social dominance usually means that Bitcoin will stay afloat at the very minimum, and altcoins can surge. That has been a common phenomenon when you see a big spike in social dominance. If it starts to go down a lot and altcoins begin to become very dominant in discussion, that's a sign that we're actually getting very greedy. So look out for that combination of signals. And as you'd imagine, the weighted sentiment, the euphoria is already in full gear here. And I think this is a sign that, there is some greed going on and a lot of celebration, which is justified, but be careful if this weighted sentiment still stays, 4 points above standard deviation, meaning the normal resting average. That would be a sign that we might have a quick turnaround coming up. All right, let's also look at the, RSI is important as well. Currently it's at about 57. 50 is average, so it's just slightly above average, but not in a dangerous area whatsoever. I'm curious, really quick, let's look at ETC's Ethereum Classics RSI, which has been one of the best performers. Yeah, it's not at a huge dangerous zone, but 73 or 74 is quite high compared to most of the altcoins that are hanging out around the 60 range right now. So pay attention to RSIs especially if you're coming from a TA background. This can have a very good foreshadowing effect into where prices are going next and which altcoins are overvalued versus undervalued. I know Polkadot had a big run after their RSI was very low going into the ETF approvals. If we look at DOT here, it was way down at 29, which was by far one of the lowest notable altcoin RSIs. And then it had this big decoupling from most of the other altcoins over the past couple of days after the ETFs were approved. Now it's up to kind of mid-range at 48. But that's just a couple of examples of a very low RSI that you could have capitalized on, and a very high RSI like Ethereum Classic, which is up something like 50 to 60% in the past couple of days. Okay, why don't we just take these last 5 minutes and answer any questions, look at assets that people may want me to cover really quick, Balraj.
I ask for assets, but there are no requests just yet.
No worries, no worries. Let's look at our activity matrix in that case and see exactly which assets might be standing out a bit. So this is our activity matrix. For those who don't know, it's a model that any of our Sandbase Pro users or trial members can have access to see which networks are on the hot side or cold side of things in terms of their overall activity. This is extremely useful because it can give us a glimpse of which pumps might be around the corner. We can see Joe here, for example. Its label is highlighted in dark orange, almost a red color, indicating that its most recent day is very hot. And sure enough, its address activity is near 3-month highs, network growth, whale transactions, and even its shark and whale tier holding between $100,000 to $1 million. Those are some of its most powerful active traders. So they're all very high, and we can validate that really quick looking at JOE. And sure enough, active addresses here, you can see just how much it's spiked, circulation as well. Yep, trading volume very high as well. Whale transactions, look how much it's really been taking off. Part of that, it looks like, has been some profit taking as well. So AJO is an interesting one. Chromia is a very hot network. Ethereum, also a very hot network for those who are tracking the number 2 asset. It has been on some nice price dominance over Bitcoin the last couple days, with all the speculation of it being the next ETF to be approved. Power Ledger, USD coin, interestingly, with all of the Circle controversy going on. Wrapped Bitcoin. Shiba is starting to pick up, so that might be worth looking into. Request and Scale. and Lido DAO, which has also been a huge gainer, up looks like 64% in the past 30 days, 137% in the past 90 days. And you can also look at the leaderboard here. So this is a good way for us to end things off with. Let's look at which assets are really breaking out in the respective key metric categories. Active addresses, Balancer, Ethereum name service, Rocket Pool, and wrapped Bitcoin are all seeing its highest days of active addresses in the past 3 months. That's significant because it means that those networks are seeing a very large amount of utility. Now, a lot of it, I made a video on this about a week ago. A lot of this depends on whether prices are surging or kind of staying flat compared to the rest of altcoins. I know for a fact off the top of my head, Ethereum name service has been a huge surger. So the fact that it has a huge active address spike is actually a sign that we might be seeing a top. No guarantee of that, but if this spike is kind of independent and out of the blue, let's see here. Yeah, I mean, that's pretty independent to me. So this looks like a top candidate due to the fact that its prices have been on a huge run. Let's make this a line. Make it bright green. Yeah, it's been on this huge run just in the last, January 6th until today. Its price is up 111%, and all of a sudden it sees this adverse activity spike, usually a sign of some serious profit taking going on there. If it was a more gradual buildup of address activity, that would be a better sign that it's just the network that's getting more active and increasing its utility over time. But one independent day is usually a bad sign if you're bullish. So there's two different ways of differentiating. You can look up the other three yourselves and see how the prices are doing and whether this active address spike is independent. Network growth, Ethereum name service once again, and Rocket Pool. Whale transactions, we have Seller, Ethereum name service, Magic Token, Maker, Pax Gold, Rocket Pool, and Threshold, all seeing its highest day of whale transactions in the most recent close. In terms of key sharks and whales, the assets seeing the biggest accumulation in the past 3 months yesterday was GMX, Hashflow, Reserve Right, Shiba Inu, and Scale. Social dominance, we have one, and that's Bitcoin, seeing its biggest day in the past 3 months. No shock there. Exchange flow, the coins that are moving out the most, Seller Network and Hashflow are ones you should take note of. No assets are seeing its biggest day of mean dollar invested age in the most recent close. In terms of age consumed, this is the last category. We're looking at the amount of coins moved multiplied by how old those coins are. The assets seeing their biggest day in that category in the past day is Ethereum name service, Request, Threshold, UMA, and Wi-Fi. And then the overall most active networks based on all 8 of these metrics combined, we have Bitcoin Cash, Shiba Inu, and Ampleforth, with Maker and Chromia also as assets that should be mentioned. Balresh, I saw a message. Did some request come in?
Yeah, we had a request for Cardano as well as for BTC whale addresses, 1 to 10K supply, and stable whale addresses in general. I'm not sure how much you covered off that already.
Got it. Yeah, we'll skip the Bitcoin sharks and whales since we already covered that. But we'll look at Cardano really quick and see what's going on here. Daily active addresses, this is a good sign. It's actually, it looks like a pretty gradual buildup in active addresses. It's not like a big independent spike all of a sudden like this. So yeah, Cardano's utility does look like it's picking up. Interestingly, it had a very low day in transaction volume all of a sudden. I wonder if a lot of the Cardano traders were just shifting their focus over to Bitcoin on the day that the ETFs were approved. MVRV they're actually in the negative for 30 days. So that's a very good sign that we might be a little bit undervalued on the shorter term end. On the long term trend, we still have some worries because average traders are up an average of 49%. Funding rate pretty flat. That's good. It doesn't mean it's showing that we're not in a greed territory anymore like we were during the Christmas and New Year break. Whale transactions. This is so weird. I mean, Cardano goes on these weird fluctuations where they have huge amounts of $100,000 or more or $1 million or more transactions, and then they just fall off a cliff here. So this is just too tough to analyze because some of their key stakeholders just really change their behavior. Could be based on algos. I'm not sure.
Yeah, not trying to be mean here, but it looks like their bot broke.
Their what?
Their bot broke, half jokingly, but like their automated process that was doing the volume.
Yeah, who knows? I mean, I don't even know. It does look bot related, absolutely. I don't know if it's actually owned by Cardano or it's a institution out there that runs a bot on Cardano. But either way, it looks like they discontinued for a while, and it hasn't changed ever since. That doesn't mean anything for the price, though. I mean, bot activity can pump whale transactions and volume for a long time and then stop and have it not really change the price action at all. It's just something that's more interesting than anything. In terms of key stakeholders, so Cardano's priced at 56-ish cents right now. So sharks and whales are going to start around 10,000 to 100,000, 100,000 to a million, and 1 to 10 million. It does look like the 1 to 10 million coin addresses are moving up in the right direction right now. They've just in the past 3 weeks gone from holding 15.97% up to 16.41% now. That's a pretty big chunk. If we combine all three of these, it should still go up. Not quite as much, but yeah, this is a good sign. These three tiers hold just under half of the supply, and they're moving in the right direction. I like to see that because Cardano was struggling compared to other altcoins after these sharks and whales dumped in September and October. Yeah, mean dollar invested age 2. We've seen a lot of dormant coin movement for the asset, and that's a good sign as well. I think overall these are pretty positive signs for Cardano. And it has been one of the more struggling assets for a lot of 2023 especially. So we'll see if 2024 ends up being a much better year for them. Based on the metrics, there's some bullish divergences going on right now. Even its RSI is below 50, and that's a good sign as well that we might be in for some semi-bottom right now. All right, thanks for that request. And that last request was about stable coins, Balraj?
Yeah, basically stables in combination with whales.
You're muted if you're chatting. Okay. We kind of covered that already. Let's do just a brief review of Tether right now, since
if you need
USD
another
coin.
altcoin, it's Bitcoin Cash.
We'll do that instead. Tether, as far as we're seeing, the main takeaway is whales and sharks are dumping Tether and USD coin right now, and the supply and exchanges have been going up massively. I do think that we might start to see some really weird skewed data for stable coins because of the fact that traders can now buy exposure to crypto through dollars and not need Tether and USD coin as much. So overall, at least my theory is that the stable coin, the entire industry of stable coins is taking a bit of a hit as a result of ETFs. Not necessarily a bad thing for crypto prices. Hopefully it's not a bad thing for the companies like Tether and USD coin to the point where they struggle to exist and stay afloat. But we're going to be seeing some weirdness from them for the next week. I think next week will be more interesting because we'll have more time to elapse and really analyze how its behavior is changing. All right, so Bitcoin Cash, one we have not looked at in a long time, but certainly predictably, I should say, it's gone on a bit of a run after ETFs were approved, because I know that Bitcoin Cash exposure has been hinted as part of some of these Bitcoin ETFs that have been approved. Let's make sure I'm loading the template correctly. I'm not sure why it's not loading. Let's give it a quick hard refresh. Go. So trading volume absolutely exploding for a second day. I would be a little concerned about that when you see an isolated day of trading volume. If we look at previous instances like here, this was the sign of a top, this was the sign of a top, and this was the sign of a top. Even this one was the sign of a top. So yeah, I wouldn't be surprised if we see at least a 1 to 2 day retrace for Bitcoin Cash. I know it went on a pretty big surge over the past 5 days, up 24% at most. So yeah, Bitcoin Cash is one of the more positive stories right now for its mini breakout, but this trading volume spike is a concern, as is this daily active address spike. We talked about the big isolated spikes and how they often lead to tops. We could see, very clearly this one was an example of that. This one sort of as well. So be a little weary of the fact that it suddenly got this huge spike and now is dropping back down. Circulation a little bit as well. You want to be careful if there's an isolated spike like we saw here right before the top at the end of the year. Not as much of a concerning circulation spike this time around though. MVRV wise, yeah, the average trading returns have gone up quite a bit at plus 10% now. That makes it more risky to get into the asset as we speak. I might suggest waiting for it to drop down a little bit. No guarantee that it will. It might climb up to 15 to 20% before a correction happens. But if we look at previous examples, it looks like 10% is a pretty common. Here, I'll just take off the long term, which is at about plus 29% right now. But you can see 30-day MVRV getting up to 10% is a pretty common time for prices to correct, and that's where we're at right now. So far, it looks like Bitcoin Cash is a concerning candidate. Cardano was looking great, but Bitcoin Cash is seeing a lot more bullish or bearish divergence at the moment. Funding rate, yeah, pretty neutral at the moment. Nothing too scary there. Whale transactions, we did see a big day yesterday with 17 different transactions valued at $1 million or more. And just like daily active addresses, that's usually a local top signal, so something we need to be careful of. Its price is about 274, so whales are going to begin probably at about 1K all the way up to 1 million. It looks like they're pretty flat. If I merge all of them together, it should be a pretty flat story. Yeah, they're actually moving down a little. Let's overlay price onto it. So we can see the big breakout in price here, but the sharks and whales are actually moving down into it. That's a concern to me. This accumulation from August to early November did have a positive impact on price, but arguably all assets were kind of going up during that time anyways. It actually underperformed compared to the rest of the markets pretty severely during the big run-up in October and November. So I'm a little concerned about the fact that sharks and whales are moving down. I would, if the ETF news was going to have a big impression on the big key stakeholders for Bitcoin Cash, then that has not been the case yet. It looks like they're dumping into this news about the Bitcoin ETF. So that's a concern to me. Overall, I think there are more signals of a top going on for Bitcoin Cash. Cardano looked far better. Social dominance is also very high. It's at a 6-month high right now, which tells me that there's a lot of mainstream FOMO going on into this price pump. So Bitcoin Cash does look like a strong candidate for a dump right now. All right, well, I think that's a good time to wrap up. This has been a really interesting week, guys, and the ETF approval is a monumental win for crypto overall, no matter how you shake it out. I would be a little concerned about the crowd's assumption that we're going to see an immediate pump due to it. But long-term wise, it certainly contributes to, the average trader out there that may not be into crypto exchanges now having more exposure to crypto. So certainly a good sign. I can't wait to touch base next week and see how markets have reacted with a full 9 to 10 days under their belts after the ETF approval. So until then, I hope you all have a wonderful weekend. If you're in the US, enjoy the extra day off hopefully you get from work, and stay safe. Let's see how markets play out here, and thanks as always to Balresh for running the stream. Take care, guys. Talk to you soon.